Okay, so in the previous lesson, we made this worksheet, right? Okay, and please take note that worksheet is an optional part or step in the accounting cycle, because basically the worksheet would assist you in creating your financial statements. Okay, because if you could see in this worksheet, we already have basically the needed things, which are the accounts and the amounts for three financial statements, which are the income statement, we have the owner's equity, and we have the balance sheet. Okay, income statement, as mentioned in your workbook, that is also what we call statement of comprehensive income. And then balance sheet is also another term for statement of financial position. Okay, actually, balance sheet and the income statement are the old terms for those. In the new standard, um, balance sheet is statement of financial position, and then income statement is statement of comprehensive income, or sometimes it's also called statement of financial performance. Right, so let's now go to creating our financial statements using what we have in the worksheet. So I'll start first with the income statement. So I'll have it like this so that we would still see the worksheet. Okay, maybe I can put it here. Right, and then we go now to columns 7 and 8 of our worksheet. Now let's start with the income statement, which is the first sheet in this template. Okay, I'll start from scratch so that you would really see. So in all, there are 5 financial statements. Okay, you can see that in the workbook or in the module in this video. And the 5 are income statement, balance sheet, owner's equity. We have the cash flow statement, and finally the notes to financial statements. Basically, notes to financial statements, that is where you write all the disclosures and explanations of whatever you have in your financial statements, or whatever you did not also disclose, so that would serve as an explanation. That's your notes to financial statement. So let's start first with the income statement. So in preparing financial statements, usually what is prepared first is the income statement. Okay, the income statement shows the financial performance of a company. Again, I repeat, it shows the financial performance of the company, because it would tell the reader if a company has a net income or a net loss. Right. So just like any other um, what you call this one, um, financial statement, we always label, okay, all our financial statements. So it's a 3-line label. First line would be the company name. What is again the company name for this one? I forgot. For this problem, so let's say CCC Consultancy. Okay, I think this is for the CC company, right? Or Carmel Co. Okay, and then the name of the document. So let's say statement or income statement. Okay, then the date. Okay, for income statement, it's usually for a period, so we say it for the period ended. Okay, this is what dates again. Let's say March 20x. So March 20x. Now the first, you leave a space. First line item in the income statement will always be your income. Okay, so here this is a service type of company, so we call it revenue, and we have only one revenue in the problem, which is, you look at now column 7 and 8. Okay, service revenue. Okay, so we have service revenue. We'll present that one now. Service revenue at the amount of 85,000. Okay, so let's just say I'll put a, so that I could add later. Okay, 85,000. Okay, then so we can perhaps highlight this to indicate that we have already placed that under the income statement, okay, just for our indication. So if you have a hard copy, you just simply put a check mark, right? Then after presenting all your revenue, okay, all your income, then you deduct all your expenses, okay? So we have here service revenue, then we deduct. These are all expenses, right? Okay, we have salaries expense, utilities expense, supplies expense, rent expense, depreciation expense. So that would be expenses under one column, okay? Then we start writing below with the indentation. So the purpose of the indentation is to indicate that all that are under here are expenses. So that would be salaries expense. Okay, salaries expense at the amount of, okay, I'll add first a column here for the currency so it doesn't mix later. Okay, salaries expense is at 22,300. Okay, then we have utilities expense of 10,700. Okay, then we have supplies expense, which is at 5,000. Okay, so if maybe you could slowly record this, right? So that then we have rent expense, 10,000. Okay, then we have depreciation expense of 250. Right, so all under our income statement in the worksheet have already been transferred or reported in the financial statements. Okay, so we get the total of this. So you have two options. You can write here total expenses, and you put your sum here. Okay, or you can have it on this side. It is actually easier to have it here because you will deduct it from your service revenue. Okay, so that would be sum. Okay, so this would be our total expenses. The total expenses would be at 48,250. So we deduct it, that would give you your net income. So 85,000 minus 48,250. Okay, that would give you your total net income of 36,750, which is actually the same as that of your worksheet. Okay, so we double rule. Do not forget to double rule the final answer there. So maybe I can have this in bold. Okay, have it like that so you could see it clearly. Okay, so that would be now our income statement. Now let's proceed to making your statement of owner's equity. So we now move to columns 9 and 10. Okay, so if you try to see under statement of owner's equity, we have here three items: the capital, the withdrawals, and then the net income. Okay, so we have that here. So the same thing, we will have a document title. Okay, we should always label all our financial statements. So this would be statement of owner's equity. Okay, for the period ended March 20x. So we have here now, we now present a beginning balance of the capital. Okay, there's no beginning balance because this is our first month of operations, right, of the company. So that would now be perhaps 0. Okay, then we have here investment, so add investment 350,000. Okay, then we deduct, or we also add the net income. So we just have all the things that we have to add together. Add net income of 36,750 that we got from the income statement. Then we deduct we only have one, right, for the less. So that would be less withdrawals, which is at 6,500. So what you can do is, okay, so that this would be a bit bigger and you could see it clearly. Okay, now, so this is 0. So here I will add this 2. So there should be a line here, right, indicating that I have added the 2 and the total would be here, this column. So that would now be 386,750, okay, minus the withdrawal. So that would be ending balance of capital, ending capital balance. Okay, so that would be 386 minus 6,500. So the ending capital balance would be 380,500. Is that the same with what we have in the worksheet? Yes. Okay, so this would now be our statement of owner's equity. Okay, try to look at here. Yes, we have the same capital ending of 380 to 50. So we will highlight this. So if you have the real worksheet, you basically put a check mark just to indicate that you have already transferred that one. Okay, then we move forward to the balance sheet. Okay, now under the balance sheet, it is the term for the balance sheet is what we call the statement of financial position. Okay, it shows the position of the company because we simply present here all the company's assets, okay, liabilities, and owner's equity. So in your workbook that is part of this video that you can download, there are 2 ways to present, okay, the statement of financial position or balance sheet. We have the report form or we have the account form. Now, in reality or in the usual companies, what they usually use is the report form. So the pahaba style. The account form it's just like a T account. Okay, all the assets are on the left, while on the right side would be all your liabilities and capital. Okay, so statement of financial position. Okay, so now we label this first as assets. And take note that we should arrange our assets based on liquidity. So if this is a long problem, since this is just a comprehensive illustrative problem, still very simple, we usually separate the current and non-current asset. But for the purpose of this problem, we will just not separate, but we will arrange them according to liquidity. So what do we mean by liquidity? Liquidity would be how fast or how liquid, how fast you can turn your assets into cash. So of course, the most liquid asset is cash. So cash is always on top. Okay, and you just follow columns 11 and 12 of your balance sheet. Right. So I'll just indent this so it looks better. Okay, cash. So what is your total cash? The amount is, okay, cash is, just copy 316,700. Okay, then followed by accounts receivable of 24,000 under assets, right? Then we have prepaid rent. Again, I'm just looking to the worksheet. Prepaid rent of 50,000, because that's basically the purpose of the worksheet, to guide you in creating your financial statements. Office, okay, supplies. Okay, I'm getting confused already with the numbering, so it would really help if you label. Okay, or you indicate that you have written them. So this would be office equipment at, office supplies. Okay, that would be at 3,500, right? And then office equipment of 18,000. No other assets yet anymore, or so just we can write here total assets. Then you add, okay? So total assets would be 412,200. So this is already done. Okay, just to indicate that we have transferred that one, or we have recorded that already in the balance sheet. Then we go to the liabilities. Okay, again, your statement of financial position shows your asset, liabilities, and owner's equity, and it shows that assets are equal to liabilities plus owner's equity. So the liabilities that we have here are just two. So we have accounts payable at 7,200. Okay, then we have unearned revenue of 15,000. So everything is just written actually vertically. That's for the report form. Let's now look at the rest here. Oh, we have actually accumulated depreciation, right? So this is done. Okay, this is done. So the accumulated depreciation is usually a contra asset, or it is actually a contra asset. So that should be reported under here. So what we do is we insert, okay? So that would be office equipment. Then we have accumulated depreciation of the office equipment, which is at 250. This is a contra asset, so that should be in a negative form or a deduct form. So it would now show that this would be deducted. This was deducted. So 316 until here minus this one, then you have your total assets at now 411,950. Okay, then we can now add our total liabilities. So this is done already, the accumulated depreciation. Okay, total liabilities, that is at, okay, this one, 72 plus that, 22,200. Okay, and then for the owner's equity, since you already have the statement of owner's equity, you can simply put here capital ending. Or if you want, you can again write here below, or right here again, this one. Okay, but usually what is presented is this for sole proprietorship. So that would now be capital end was how much? 380. Oh, there's salaries payable. Sorry, I forgot that one. So there's salaries payable. So that is how helpful you do the highlighting, no, or the indicating, because it would tell us that salaries payable was not yet reported here. So we insert again. Okay, so you always please be careful. Even me commit mistake here. So just be careful that we have 95. Okay, so the total liabilities now would be, okay, 31,700. Okay, capital ending would be, capital ending is 380, 250. Okay, 380, 250. Right, so now we can add here So I'll just cut this one, put it here. Okay, so we can now put here total liabilities plus total liabilities and owner's equity. Okay, so that you could just see clearly. I'll zoom it. And okay. So this should be like that. Okay. This one can be top and bottom line first, and this one as well. Because what we will double rule is the total liabilities plus owner's equity. 31,700 plus 380,250, and that's equal 411,950 assets is equal to liabilities plus owner's equity. That would be your statement of financial position. Okay.